Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is January 4th, 2012. I'm still trying to get used to saying 2012 and not 2011, but anyways, if you guys been trading the market the last couple of days, and if you're a day trader, like I have been of late, you'll know that it's been quite frustrating to get really any conviction to the upside or to the downside. Now we got the huge gap up on Monday, or on Tuesday, I'm sorry, market was closed on Monday. But on Tuesday we had the large gap up, it was like 20 something points, and we actually closed below where we opened at, so that gave a little bit of a, threw a shadow of doubt over the markets for a little bit there, and then we opened up lower and basically closed at break even today. I am definitely curious about how much conviction there really is behind the breakout above this downward trend line off of the July highs. So far with this lack of volume, I mean today looks like holiday volume from last week. I mean it really does, and it's really not that characteristic for the beginning of the year to be like that. In fact, there's usually a lot of enthusiasm and euphoria and optimism about the new year at hand, so to see it behaving this way really casts into doubt whether or not there is going to be a true breakout here. A couple of things that it could definitely do to bring more buyers into this market is to break above these highs from October, the late October highs. I think that would go a long ways because that would get us, probably over that 1300 level. The other thing too, and it's interesting because this SPY and SPX shows two different things. On SPX, which is the actual charting of the S&P 500, you can see here we're just a shade above this head and shoulders neckline here, this neckline right here. So we're a shade above it, but then on the SPY, and they don't always go together, but they're supposed to, I mean the price patterns are going to be the same, but in this case it's still below the neckline. And if that's the case, you can see where it's actually struggling getting above that neckline the last 2 days. So that's one thing to keep in mind. Which one do I prefer? I like to basically use both of them. I like SPY because it gives the true candle formations. If I'm not really worried about the candles, then I'll go off of SPX or the S&P 500. But anyways, you look at 30-minute charts here. We'll pull them up as well. "30 minutes chart shows over the last 2 days. It doesn't show a healthy chart because if you look at it here, we're basically just pushing lower. Now we broke above that a little bit towards the end today, but overall I would still say it's a bearish chart on the 30 minutes until we can break above the afternoon highs that we had yesterday. And on the 5-minute chart, a little bit better, but you're looking at a different time frame here. You still have that downward trend, but then even a shorter time period, you do have what I would call a little bit better candle pattern, but even that is starting to flatline a little bit because broke it here again, and then it's holding onto that trend line now. But so it's just basically flattening or maturing a little bit in its trend and conviction. I would say we could have a definite down day tomorrow if, or a significant sell-off tomorrow if we can break below these, lows from 130 today. All right. Also traded TZA and TNA, and I'll keep the 5-minute open for that. TNA went well. I traded it early on when it broke out here. Boom, got into that, sold out literally like pennies off of the high. Got into TZA when we started breaking down right here, made a slight profit off of this candle right here, and then tried to trade it again, and when I did, I got in on this candle here, and boom, just went right against me. I sold out at the close on this candle right there. So on the day I actually lost money. I was down about I don't know, like 0.1% or so on the day. I think my losses weren't that bad, but nonetheless, it's frustrating because I can't get much traction so far this year, and I do like to get out to a fast start on the year. I don't want to pedal around at break even for profits and losses, and that's what I'm doing so far on the year. So hopefully we get some conviction back into this market. I know I need to get back into swing trading a little bit more. A lot of the demands with the website and providing you guys with consistent content and so forth can sometimes keep me from being able to put the time and effort into swing trading. So that's why you see me doing a lot of day trading of late. So hopefully I can do that, put some good trading ideas out there for you and get my feet wet in that area again, because that really is my bread and butter. It's what I'm best at and everything else. But when you got quirky markets like we have, it definitely makes it a little bit harder to swing trade, because you just really don't know what from day to day what kind of crazy news that Europe's going to do, or some rogue dictator or anything else. So it's a very news-driven market right now. It seems to have been quiet over the past couple weeks. Hopefully that continues and we can trade off of technicals and company charts, which you can still do right now, but you got to be willing to accept the fact that a lot of unexpected events can happen in this particular market. So alright, with that said, I'm going to wrap it up. It's a short video. Working on a new chat room for you guys. It's going to be really cool when we get it launched. It's going to have more features and you'll know what to do with, and it'll all be free. So y'all take care, God bless, and have a nice evening.